The Sanlam Managed Solution Funds is a fund of fund. So it's a single entry level, a single entry point into several unit trusts. Several collective investments managed by our different managers in the different asset classes. It's a fund where you have exposure to both local and offshore investments across the asset classes in both areas. It's a very cost-effective fund, and you have 5 risk-profiled funds moving from conservative, cautious, moderate aggressive, right up to aggressive, which has a 75% maximum equity weighting. It's also a Reg 28 fund, so for those retirement savers out there, it talks to you from a compliance perspective. The SIM Managed Solution Funds are positioned in accordance with the house view, the asset allocation house view of SIM. Where I do differ is in terms of the magnitude that I apply across the different profile funds. The SIM Managed Solution Funds is currently neutral on local equities. So we like equities. Our long-term real required return on equities is 7% at the moment, which is where the markets have just dipped during the early part of the second quarter. Our equities are at about a 2% discount to the inherent intrinsic value. I adopt a core satellite approach, whereas my core fund, I use the SIM General Equity Funds. We have 2 satellite funds on the local equity platform, and that is the SIM Top Choice Equity Fund and the SIM Value Fund. All 5 risk profile funds are underweight bonds, which is in line with the asset allocation house view. We are underweight bonds because if you look at the yields and if you look at where they're currently trading relative to the inherent fair value that we believe we should attribute to bonds, they are extremely expensive. So the whole fixed income asset class is expensive. We've been very fortunate in the SIM Managed Solution Funds to have within our cash component a fund which really does enhance yield. It's called the SIM Enhanced Yield Fund. It's a very nice enhancer, particularly for the more cautious and conservative investor that has a higher degree of exposure to cash in their fund. All 5 risk profile funds have a neutral weighting in property, and this is despite the fact that property has done extremely well from a share price perspective, but on a relative value, if you look at the dividend yields on offer from local property, it compares very favorably relative to your long bond yield, your South African long bond yield. So we do like property from a relative perspective. In an absolute perspective, we think property is expensive. The vehicle that all 5 funds use to invest in local property is via the SIM Property Fund. And we believe that this fund has very good defensive properties. We are overweight offshore assets, and that has done us quite well in this recent times where we've had a rapid and a pronounced depreciation of the rand relative to the US dollar. So we like offshore assets, and within offshore, in the international space, our preferred asset class is equity. We certainly prefer it to cash because at the moment, global cash is giving you negative real returns. Global bonds, if you look at the US Treasuries as your benchmark, your 10-year yields on your US Treasury is currently about 1.7%. So if you use the implicit inflation targets of your central banks, globally, you're getting a negative real return from global bonds. Global equities are our preferred asset class in the global space. The historic price to earnings of global equities is currently about 14.5 times. And this compares to a long-term average of about 17.5 times. So when your PE is high, equities are looking more expensive. On the global property side, we prefer global property to local property. In international space, it's been a good contributor, a positive contributor to our total returns. We invested in the Sanlam Global Property Fund, which is currently offering you a yield of about 6%. And if you compare it to all the other asset classes in international space, in the fixed income asset classes, including cash, it compares very favorably. The SIM Managed Solution Funds is doing what we expect of them. From a performance perspective, a total return performance perspective, the conservative and cautious have outperformed the benchmarks for the 12 months to December to the extent of 4 to 5%. On a longer term basis, they are performing in accordance with how we expect them to perform. Where your aggressive funds in an environment where equities have performed very well are delivering better absolute returns than your moderately aggressive funds, and more so than your cautious and conservative fund.